Papers have been printed and Josh Frydenberg is busily rehearsing his speech and preparing to hand down his fourth and possibly last budget as Treasurer. He's promising some good economic news tonight. The deficit expected to be lower than the $99 billion forecast in December, and that's really because a lot more people are in jobs, helping to boost tax revenue. The jobless rate is forecast to fall from the current 4% to 3.75% in September, the lowest in decades, helping to drive what Josh Frydenberg describes as the strongest wage growth in a decade. Now, that may sound positive, but the big question is whether wages will rise faster than inflation. We'll delve deeper into these figures today to give you a sense of what it means for you. And to help, I'll be joined by the ACTU President Michelle O'Neill, Business Council Chief Executive Jennifer Westacott, and economist Gabriella D'Souza. So what do we know about what's in the budget so far? Well, the improved bottom line means there's a bit more cash for the coalition to splash. A multi-billion-dollar cost of living package is expected to be the centrepiece, a one-off payment for some and a temporary cut to the fuel excise to help with the rising cost of food and petrol. But as is tradition on Budget Day, cameras captured Mr Frydenberg's walk from the Treasury building just down the road to his office here at Parliament House. He's been spruiking temporary targeted measures to help address the cost of living pressure.
With cost of living, there are real pressures right now on Australians. It's the number one topic around the kitchen tables of Australia. So tonight, in a temporary, in a targeted, in a responsible way, we will provide cost of living relief. In just a matter of weeks, the Australian people will go to the polls. They will face a clear choice between a coalition led by Scott Morrison that has delivered one of the fastest economic recoveries anywhere in the world and has the plan for the future, and a Labor Party which puts all those gains at risk.
Josh Frydenberg basically confirming there that the coalition will use this budget as a launch pad for the May election, so there is an awful lot riding on it. Well, over in the Labor caucus room, Anthony Albanese was rallying the troops this morning and indicating this election will be fought on wages.
Making sure that Australians have access to the secure jobs that underpin everything else. They have made 55 predictions about wages and 52 of them have been wrong. And tonight, of course, they'll have another prediction. But Treasury's already out there saying, well, the pre-election forecast might be a bit different, the figures, because we know that they'll want to gild the lily. But we know that real wages declined by over 1% in the last year. We know the last budget, not that long ago, predicted real wages to decline over the coming 4 years. And what we know is that they themselves have said that it's part of their design feature of their economic architecture. This is not an accident.
The Labor leader Anthony Albanese there. Well, that's where we'll leave the politicians. You've now heard the pitches and how both sides are framing tonight's budget. Let's now hear from the experts. Gabriella D'Souza is a senior economist with CEDA, the Committee for Economic Development Australia, and she joined me a short time ago. Gabriella D'Souza, welcome to the...
Thank you so much for having me.
Well, tonight we're expecting improved deficit and debt figures. We're expecting a jobless rate we haven't seen since the 1970s. What has driven this economic recovery?
Look, I think we had a lot of fiscal stimulatory spending over the last 2 years to try and get us out of a possible COVID-related recession, and that worked reasonably well. We had, we had the implementation of JobKeeper and JobSeeker, which obviously added to the stimulation of the fiscal stimulation of the economy, and then we also had very loose monetary policy as well, which added to the economic activity in the economy, and obviously that's kicked off a really great recovery in the labour market. We've seen highest employment to participation ratio for women of the series. We've seen the highest labour force participation rates as well amongst women. And we've also just seen incredibly low unemployment rates, just ones that weren't even forecast in the last budget beyond the forward estimates. So yeah, it's just been quite an amazing recovery.
And is this sustainable? Could we expect, if the forecast is showing the unemployment rate might hit 3.75% around September, is it going to stay around that sort of level, or is it just sort of the tail end of the stimulus spending that's really propping the economy up?
Look, I suspect it is the latter. So I think it is the tail end of the stimulus spending. So in addition to all of that monetary and fiscal spending, we also stopped Australians from going overseas and having holidays. So there's a whole bunch of money that's just kind of swirling about the economy, and that has led to an increase in spending and economic activity. So I do think we're going to be in for a couple of cycles probably of lower unemployment rates than usual, but I do think that will pick up before the end of the year.
How does the government bed that in? How do they maintain an unemployment rate? What can the government do to maintain an unemployment rate below 4%?
I guess you could keep spending, which it seems like we might get a very high spending budget this time around. With cost of living pressures coming to the fore, we know that this is going to be a cost of living budget where the government is going to try and ease some of those pressures on families through the budget and through fiscal stimulus. So we do know that that's going to be part and parcel of this. The challenge for the government, of course, just remains, long-term debt sustainability, which is going to start becoming a huge issue for whoever next gets into government.
Especially if inflation keeps rising and interest rates start to rise, it means the debt bill only grows bigger.
Yeah, and also, a lot of our really great job market figures and labour market figures haven't really translated into as much wage growth as we were expecting. So that's still quite a challenge for the government in terms of just how do you get real wage growth to increase?
Well, the Treasurer has, in some budget leaks today, said that we're expecting the highest wages growth in a decade. Given wages have been so stagnant, is that really something to celebrate?
Look, I think it is good for Australians that we are going to get some real wage growth. We haven't had much over the last 3 years. So that is good. And we are seeing it pick up in certain sectors. But we do need to keep in mind the disposable income as well of Australians. And that's, your income minus whatever you spend on cost of living. So if we continue to see cost of living pressures and inflation go up, then the gains would not be as high.
There used to be a sort of equation that a really low unemployment rate increases competition in the market, meaning workers have more power to start demanding pay rises. Do you think that that might be what we see again as the unemployment rate continues to fall?
I think we have seen that over the course of the pandemic in certain sectors. I think that's inarguable, that I think in the accommodation and real estate and food sectors, we have seen a little bit of a wage uptick, which has been great for those workers. Across other sectors, though, that's still up in the air. We're not really sure how those sectors are going to go. And again, with borders reopening as well, we do know that a lot of businesses are really struggling to find workers. So that's going to be a huge issue as well. So we do need to look at that other side of the equation, where we know that employers are starting to put off infrastructure and other kinds of projects because they're not able to get the kind of labour that they need.
Do you reckon that will be somewhat alleviated, that issue, by the fact that the borders are now open? We can have more skilled migration, more working holiday makers?
Look, I think, when the borders were shut, I think a lot of us thought that, all the government really needs to do is flick a switch and everyone will come straight back. But the reality of it has been that it's been quite slow to come back. We just had our sixth consecutive quarter of negative net overseas migration growth. That's quite worrying, and it will come back slowly, but I don't think it's going to come back as quickly as we had thought it would. And part of that is just, we diverted resources in the Department of Home Affairs towards approving exemptions, and now to try and move that towards visa processing, it takes a bit of time. So.
Okay, we're just returning to the budget tonight. We're expecting a big cost of living package. Is a cut to the fuel excise and one-off payment the kind of ideas that have been bandied about, speculated on? Are they going to actually help people?
They will help people in the short term. Over the next 6 months, we've heard that there will be a temporary cut to the fuel excise. Obviously there are other reasons why we have a fuel excise. We do need to fund the cost of government, so the cost of building roads, fixing roads, all of that other stuff. And also, it effectively does act as a bit of a deterrent in terms of, trying to get people to go into electronic vehicles, for example, as well. So I hope that it will just be a temporary cut because we do need to return to why we have those taxes as well in the first place.
Is it a bit of a ticking time bomb for whoever is the government in 6 months' time, when we expect this measure will be reversed and they'll have to actually hike the tax again?
Yeah, look, it was, we've seen this happen before. We know that the Howard government paused the fuel excise for a few years and then it was brought back in. It is always difficult to raise taxes again and to create a new tax base. So, yeah, it is going to be a challenge for the next government.
Whoever that may be. All right, Gabriella De Souza, thank you for your time today.
Thank you so much, Jane.
So that's the broad economic outlook. To get a better understanding about what the budget means for workers, I was joined by Michelle O'Neill, the President of the Australian Council of Trade Unions. Michelle O'Neill, welcome to the program.
Hi, Jane.
Josh Frydenberg, in anticipation of the budget tonight, has said that there will be a forecast for a real wage rise. Do you believe him?
No, I don't. And I don't because of one simple fact. The government have never got their wage forecasts right in every single budget they've delivered since they've been in power. Every single time they've got it wrong. And what we know is if you look at what's happening with the cost of living, the rise in inflation and where wages are and also where they're predicted to be by the Reserve Bank, we know workers' wages are going backwards in real terms. So I'll be interested to have a look at these figures. But workers lost on average $800 last year in 2021, and on the government's own figures are looking to lose $600 in the first 6 months of this year.
I guess the circumstances are fairly unique now. We're looking at an unemployment rate forecast that hasn't been so low since the 1970s. We've got a competitive labour market now, a higher participation rate. Doesn't that naturally lend itself to an increase in wages?
Well, this is the thing that's broken, and I don't think the government, Scott Morrison or Josh Frydenberg, have got their head around this. Because so many jobs now are insecure jobs, that link between the unemployment rate and what's happening with wages just doesn't work the way it used to work. Since 2020, nearly half of the jobs that have been created have been insecure jobs. And we've got more Australians now working 2, 3 or 4 jobs than ever before just to get by. So it doesn't follow that just an unemployment figure means that you're going to see a growth in wages. And also we know that there's hidden things in that. There's still many people that don't get enough hours of work and a whole lot of others that are wanting work but not looking on any day because of things like childcare. So if you don't do something about making childcare accessible, it stops, for example, a whole lot of women actively being in the labour market.
So what can the government actually do? You're saying, a more affordable and more generous childcare policy, but what can the government do to actually increase wages?
Well, there's a few key things they could do. They could intervene this week in the national wage case. So this week, the case that looks at the minimum wage for 1 in 4 workers around Australia is on. And the government should be putting forward a submission to that national wage case saying there needs to be a significant increase in the minimum wage for the lowest paid workers in Australia. The other thing they could do is do something about their own employees in the public sector. So the government directly controls wages in terms of public sector workers. It would send a message to the private sector as well if they lifted those pay caps and gave workers a fair wage increase.
When it comes to the submission to the Fair Work Commission, it is after all an independent sort of umpire. So how much of a difference, I'm not saying the government shouldn't do this, but I'm just curious, how much of a difference does a government submission actually make when you've got the Fair Work Commission sort of assessing all factors behind a possible increase?
Well, of course the Fair Work Commission will look at everything, but it is the government of the day. It's the government of the day that have access to the Treasury figures, that know what's happening in terms of the labour market. So it's an important contribution and would be given serious weight by the Fair Work Commission, and we know that that's happened in the past. So why won't the government step up? And this is not a current problem only, Jane. This is 9 years of this government nearly, and 9 years of stagnant wages. That's not a coincidence. This is something that they've actually factored into the labour market in a deliberate way. So, I mean, one-off payments in this budget, which seems to be what they're thinking is going to get them through, I think will be seen by working people pretty cynically as an election bribe, because people know one-off payments get eaten up really fast and you don't have one-off increases in your rent or one-off increases in your grocery bills.
But there is, I suppose, economic circumstances right now are leading to food and fuel prices increasing. The invasion of Ukraine, for example, has seen the global oil price skyrocket. Wouldn't it be sort of, I suppose, leading up to an election, a sensible move for any government to sort of say, well, there is a temporary increase in these costs, here's some cash to help you out?
Look, every little bit will make a difference to people, of course, when you're doing it tough. But when you're doing it tough, you also know that you need the real changes. And the real changes is a lift in wages and more secure jobs. And that's what working people are looking for from this government. And when you think about things like petrol, it's not just been since Russia invaded Ukraine that we've been seeing petrol prices going up. They were going up significantly last year as well. And rent has gone up 9%. Childcare has gone up more than 6%. So these are all rapidly outpacing wages, and that's why it's very hard for people and why they know that delivering real wage increases is what's needed for the long term.
Yeah, I guess the question is, if the government is saying that there will be a forecast increase in wages, will that outpace the rise of inflation?
I can't see it, because it seems to be they're also going to be suggesting like 4.5 or 5% increase in inflation, it just doesn't add up to me that there will be any immediate increase in wages unless the government acts on the structural changes that are needed to deliver real wage increases. And those structural changes, they haven't been leaked yet, Jane. I'll be watching with interest tonight, but they are ones that would make the real difference, and they are things like the minimum wage, they are public sector wages, intervening in that aged care case that's going on about the value of jobs and pay in that sector. You think about how important that work is, and yet the government won't support wage increases for those workers?
Well, let's talk about aged care, because we are expecting one of the pre-budget leaks has been about a $50 million investment to subsidise training places for 15,000 workers in aged care. It's a chronically understaffed sector. How much of a difference will these extra 15,000 places make?
Look, I was shocked by the minuscule amount of that leak, honestly, when you think about we've had a Royal Commission that says what's needed in aged care, that supported the need to have serious investment in the workforce and a lift in the wages of workers in the aged care sector. This is not just the view of unions, this is a view of a Royal Commission, and the government's failed to act to do that. And so keeping workers and attracting workers into this sector, you have to address wages and secure jobs. And training more people who may temporarily move through a sector and then leave it again because they're not getting secure jobs or good wages is not an answer.
If we could return to the issue that you raised earlier about insecure jobs, I assume you're talking about gig economy, casual workers.
And so a combination of casual workers, gig economy workers, but also workers on contracts. Many workers now are on rolling contracts that never end, but they never get any paid leave. Also workers in labour hire, so they're working for companies where they might be employed by another business but doing the same job as workers who are permanent workers.
Okay, well, just curious, because with casual workers, at the moment they're making up just under a quarter of the workforce. Unions have raised concerns before, because obviously they don't receive the sort of entitlements like annual leave, sick leave that full-time workers receive. But what sort of percentage would unions like to see casuals make up of the total workforce?
Well, look, what we think is needed is a genuine definition of casual, because there are some jobs that are casual. If you think of some jobs, for example, in tourism where there's a peak season and then there's not, and that makes sense if they're jobs where there's not a longer term regular employment, then they are casual jobs. What happened though is last year the government changed the definition of casual in the Fair Work Act in the midst of the pandemic to make it easier to call a job a casual, even if it turns out to be permanent. So we've got a lot of sham casual work at the moment. If this was fixed, it would be by having a simple, clear, genuine definition of what casual work is, and then giving other workers access to permanent jobs. And you can also do something about contract jobs. So, for example, in other parts of the world, you can have a limit on the number of consecutive contracts, and then people are offered permanent work.
All right, Michelle O'Neill, sadly we've run out of time, but thank you for joining us today.
Thanks very much, Jane.
So that's the view of the workers. Now for the employers. Business groups are comfortable with immediate cost of living relief, but their biggest concern right now is labour shortages. The Business Council has called for an increase to the skilled migration cap and more investment in skills training. Jennifer Westacott is the Business Council Chief Executive, and she joined me earlier. Jennifer Westacott, welcome to the program.
Thanks very much.
So if you were advising Josh Frydenberg in terms of tonight's budget, what would you tell him that needs to be done?
Well, I think the first thing is we obviously want to see momentum in the economy, and obviously the figures that have been released today show that the economy is going to bounce back. Unemployment's got a 3 in front of it. You know, we want to see that maintain, and we want to see the policy settings that maintain the momentum. The second thing is clearly cost of living expenses, and the governments have to respond to that. I think, you know, those cost of living pressures are real for families, and there's no way of avoiding that, and it's important the budget addresses that. The thing that we're really looking forward to seeing, though, is, you know, have we set the foundations for a private sector-led recovery? So both sides of politics say the private sector now has to take over the recovery. We agree with that completely. But are the tools there to do that? Is the investment environment right? Are the settings to really drive skills? Are we going to get those labour shortages solved? Are we going to continue with the productivity measures around regulation, skills development, infrastructure? Those are the things we'll be looking for in the budget, and those are the things in our pre-budget submission we made a very strong point about.
Okay, well, if we just go back to maintaining the momentum for the recovery, what are kind of the specifics that will help maintain the momentum with your recovery we've had so far?
Well, the first thing is labour shortages. I mean, if I speak to businesses, small, medium, large, they all say I just can't get enough people. And whilst there has a kind of temporary effect on wages in that respect, it's not a solution to our problems, because what we're seeing is that as that goes on, projects will get delayed. Restaurants or services that were going to open 5 days a week only open 3. So it's sort of not a solution to our wages problem, which is a real problem. We have to fix it. So I think the first thing is sorting out those labour shortages. The second thing is really making sure that Australia remains open, that we avoid going back into lockdown, that we avoid the stop-start approach we've seen over the last 2 years, but we stay open to the world, that, you know, we finalise those free trade agreements, that we stay an open trading nation. And then the final thing is that we start to address these productivity problems we've had, which are caused by a lack of investment. We've still got investment lower, or as low as it was in the 1990s. We've got to make the country more attractive to invest, and then that's about obviously our competitive tax system, but it's also about regulation, it's also about how long it takes to get things done, and it's also about our skills system. We need to be able to get the skills that is going to be a magnet for investment, and that's about some of the stuff that governments are doing, about short courses, micro-credentials, but we really need a big push on that.
In terms of labour shortages, will having an open border address some of the labour shortages, at least with skilled migrants coming back, students, holiday makers? Yeah,
it will, but it's got to happen at a rate and pace and scale, and that's why we called for a temporary increase to the skilled migration cap to 222,000, but reweighting it towards the skills end.
Yep. Has there been any kind of positive signs?
Well, we'll see in the budget what the migration figures are. But, you know, that's one solution. But we've also got to do some very targeted measures. We've really got to look at making sure that we are kind of trying to make it as easy as possible for small and big businesses to get the labour they need. So the kind of agriculture visa that has been talked about and obviously being implemented, you know, working holiday arrangements. We've got to get that full suite of the labour market into Australia, and we want to see some movement on that in the budget.
What's making it hard for small and medium businesses to employ now?
Well, they just can't get people. So people say to me, I just can't get people. So there's two issues. They just can't get people, or they can't get the skilled people that they need. And I think this is the myth about migration and skilled migration. Quite often you need a person with quite specialised skills in order to then do a transfer of those skills to other people, which means a project can get up. So people have got particular types of skills. You bring them into Australia on a 2-year or 4-year visa. They transfer that knowledge to workers. They train other people. You know, particularly in these new technologies, advanced manufacturing, composite printing, you know, we don't have all of those skill sets in Australia. We need to bring people in from other countries. And that will then create the skill mix that a major company says, well, now I'm going to put that project in Australia. And that's the sort of thing we're looking for, is that sort of dynamic labour market where you've got that transfer of skills. But at the kind of entry level, people just say to me, I can't get anyone.
Yeah.
I mean, whether it's in country towns, whether it's in big cities. I just can't. I'm opening my restaurant 3 days a week, Jennifer, because I can't get people to do any work.
Well,
so
it is an incredibly competitive and tight labour market
Yeah.
right now. We're expecting the jobless rate to hit lows we haven't seen since the
Absolutely.
70s. We've got a high participation rate. Does that mean that wages will rise?
Well, I think there's an inevitability about wage inflation in that environment. The question we always ask is, there's that sustainable wage rises. We want people to get paid more, but unless we're sort of doing the hard yards of making our companies and businesses more successful, getting into new markets, expanding on what people are doing, getting our enterprise agreement system back on track working again. What I worry about is that what we see is temporary wage spikes, which have the potential downside that you actually stop things from happening, versus the sustained effort we need to make to lift our productivity, to lift our competitiveness, to lift the success of the private sector, and to get our enterprise system working again so that people share in the benefits of that. That's real wage growth as opposed to a temporary wage inflation.
I mean, the government has tried. It moved to try and, speak to the unions, business groups, and I suppose reform in some ways enterprise bargaining. It didn't work. Do you have any optimism that, there might be some changes in this space regardless of who wins the next election?
Well, I hope there are, and I think there have to be, because this was the system, remember, that Labor introduced, that basically said we want workers and their employers sitting down together, working out how an enterprise can be more successful, new technology, better ways of doing things, and then sharing those benefits. And we absolutely are committed to the sharing benefits side of that. It can't be a one-way ride. It's got to be a shared benefit exercise where workers are better off. And I think it's a very sad thing that system that has repeatedly paid people more, is in a state of freefall. And I think both sides of politics, whoever wins the election, has got to save that from just falling apart.
Well, as we enter the next election, we're in sort of an unusual space because the economic policies between the two major parties don't differ wildly, certainly not as much as they did back in 2019. So the Treasurer, Josh Frydenberg, has today said, don't risk a change of government because that could risk the progress we've made economically. Do you believe really that a change in government would risk the gains we've made since the sort of end of the worst of the pandemic?
Well, I think, the result of the election will be up to the Australian people. What we want to see is both sides of politics confront the reality of the situation we find ourselves in. A very strong economy and maintaining that momentum I've talked about, but also doing the hard yards on the things that are going to set us up for the next 30 years of economic growth, because it's that growth that put more money into people's pockets. It's that growth that's allowed us to run the services that are the envy of the world. And we want to see those policy settings around skills, around a competitiveness agenda, around attracting investment, around addressing inequality, around addressing our regional potential, and really kind of making sure that we get regions operating their full potential. We want to see that agenda. And I think that's the message that we've given both sides of politics for a long time now. It's up to the Australian people who actually wins the election. But make no mistake, the issues that both political parties will inherit are those same issues, and they require the sort of responses that we've talked about.
And just finally, bringing it back to the budget, we are expecting a multi-billion-dollar cost of living package, one-off payments, as well as a temporary cut to the fuel excise. Is this a sensible approach to address the pressure right now?
I think it is. It's very difficult if you're in government to not address those issues. They're real for people. They're hurting families. The crucial thing, of course, is getting that to be one-off and temporary, not baking big extra spend in the budget, and then buying, I guess, the time on the fuel tax exercise to start doing the thinking that the government has flagged about road user charging, a kind of nationally consistent model, particularly one that starts to address the fact that we'll have a lot of electric vehicles coming into the market. So I think it's important that we are seen to address those cost of living pressures, because for a family, the sort of money that's being talked about, $250, that's a lot to people. That means a lot to them. And I think we've got to address those cost of living pressures, but at the same time, we've got to make sure that we do the structural work that sees the economy growing stronger, because it's that growth that puts ultimately more money into the coffers of government and more money into people's pockets through higher wages.
All right, Jennifer Westacott, thanks for your time.
Thank you very much.
Well, there you have it, a pretty lengthy wish list.